Welcome to the Chrisman Commentary Daily Mortgage News Podcast. I'm your host, Robbie Chrisman. Topics on today's episode include why you should never listen to the experts, total experts Joe Welu on how the company is leveraging its new Agentic AI Sales Assistant to transform loan officer productivity, strengthen customer relationships, and drive mortgage volume. And we're in a low volatility period in the capital markets, but there's still a lot going on. Thanks to today's podcast sponsor, ICE. ICE has and continues to transform the housing finance and homeownership experience. By seamlessly integrating best-in-class solutions, ICE optimizes every stage of the loan's lifecycle. As the standard for innovation, artificial intelligence, efficiency, and scalability, ICE is the technology of choice for the majority of industry participants, defining the future of homeownership. Learn more at mortgagetech.ice.com. The difference between me and Superman is that he has supervision. I require supervision. We're halfway through the third quarter, and will your company require supervision or supervision to go forward? Speaking of which, when did our business start with the catchy slogans? Stay alive in 25, stay in the mix until 26, it'll be heaven in 27. How about try to earn a little revenue every day, day after day? In mortgage land, I received this note. Quote, I tuned in recently to a webinar of an investment banking economist talking about the lending industry in the third and fourth quarters of this year. All they could talk about were predictions of doom and gloom, aka increased delinquencies, increasing inventory for sale, fewer borrowers qualifying, especially with student loans coming due, more borrowers underwater, agency uncertainty, more sellers refusing to budge on their asking prices, and higher rates. Are you hearing similar things? Well, never listen to the experts. Watch the facts. No, volumes aren't setting the world on fire, but most companies haven't right-sized and seem to be doing moderate to good. Individuals and families still want to own a home and stop renting and still want someone to help them save money on their overall debt picture. The mortgage secondary market remains anchored by the core dynamics of supply and demand, with current trends largely shaped by the sustained higher for longer rate environment. Mortgage rates have stabilized just below 7%, trading in a relatively narrow range. While market participants initially anticipated a more aggressive decline in rates, expectations have shifted toward a more tempered trajectory, with only modest downward movement likely through the end of this year. The adjustment reflects persistent inflationary pressures and the Federal Reserve's cautious stance on policy easing. In terms of volatility, overall volatility remains low and spreads have held firm, but recent events serve as a reminder that dislocations can and do occur. The notable yield spike in April 2025, driven by the market reaction to Trump Liberation Day and the unexpected tariff announcement, illustrates how quickly sentiment can shift. U.S. equity futures dropped sharply and gold surged to record highs as investors sought safety amid heightened uncertainty. Given these dynamics, it's probably best to advocate for regular mark-to-market valuations as a best practice to monitor risk and maintain pipeline discipline. MBS and Treasuries fell on Thursday, owing in large part to the sharp rise in PPI wholesale prices, which surprised to the upside at plus 0.9% month over month in July, the highest since June of 2002, versus expectations of rising 0.2% and after a flat reading in June. The market's primary focus was the implications for the Fed's preferred measure of inflation, core PCE. In the context of post-Liberation Day inflationary fears, realized data has served as a reminder of how challenging it can be to translate White House headlines into meaningful projections for the economy. There are so many moving parts associated with higher tariffs that inflation data shouldn't surprise when it doesn't match initial estimates. Overall, the economy is in the process of adjusting to a higher levy structure, and it hasn't yet translated into a sharp spike in inflation or decline in overall economic activity. Demand for mortgage assets has strengthened as the current rate environment has pushed fixed income yields into the mid to high single digits, making mortgages increasingly attractive to a wide range of institutional investors, including insurance companies, asset managers, and hedge funds seeking to capture spread in a yield-starved environment. The influx of capital has tightened spreads across the mortgage credit curve, especially in higher quality, non-agency, non-QM, and scratch and dent loans. With supply remaining muted against resilient, and in some cases growing demand, the market faces a technical imbalance that will shape pricing, spreads, and risk appetite through the remainder of the year. For today's interview, I want to welcome to the podcast Total Experts Joe Welu to discuss how the company is leveraging its new Agentic AI Sales Assistant to transform loan officer productivity, strengthen customer relationships, and drive mortgage volume while examining the evolving opportunities and risks AI presents to lenders this year and beyond. He founded Total Expert from the basement of a real estate office in 2012, seeing a need for the first enterprise-grade experience platform purpose-built for the modern financial services industry. Total Expert now serves the vast majority of top lenders and banks.
Seems like there's a big technological arms race happening in the mortgage industry right now, and obviously Total Expert is right in the mix of that. How have you evolved this year? Because technology is progressing so rapidly, it requires constant innovation on behalf of tech companies. And what are you focused on as we move into the latter half of the year?
Well, first of all, your question states something that I think can't be overstated, which is just a technological arms race. I believe we're in the midst of the largest technological shift in human history with the advancement of the large language models and agentic AI. And so if you think about Total Expert, how we've evolved this year, we have really doubled down in our R&D and both our pace of innovation and the depth of the problems that we're working to solve. We have invested heavily in a couple of areas. One, our customer intelligence solution has really evolved to provide lenders a very comprehensive system of intelligence around everything in their database, right? And the ability to improve retention and recapture and find opportunities. So that's one key area. The other key area that we're moving very quickly in is agentic AI. And if you think about agentic AI and AI agents as the ability to really give your people superpowers and deliver levels of productivity that a year ago nobody thought would be possible. So we've started to bring some of those capabilities. We're live in market, and that is, I would say, our biggest evolution as a company is now transforming into becoming an AI-first company and then providing those capabilities to our amazing customers.
Yeah, I think it was a couple months ago that you rolled out your solution in a closed beta program. It's called AI Sales Assistant, correct?
Correct.
Can you talk a little bit about how powerful it is when mortgage lenders put it to its full use?
Yeah, you bet. So yeah, we went live with our AI Sales Assistant. It's a voice AI sales assistant. It has human-like voice, the ability to have human-like conversations with a consumer. We rolled that into a closed beta with the first top 5 national lender in February. And the goal was to really take that front line of lead qualification, lead incubation, and really automate as much of that as possible so that your loan officers, even in a call center or a distributed retail team for that matter, were able to spend much more of their time at the moments where consumers need advice. So the quality of the time they're spending on the phone with a customer is exceptionally high. That's the goal, right? And we assumed that it would take maybe 9 to 12 months to get to parity with the people that were actually doing that job, which is, not a highly regarded job, getting, calling leads or following up with leads. There's people that don't want to be bothered. And so it's just a lot of in the trenches work. And we assumed it would take 9 to 12 months to get to parity with a human. And the AI voice AI agent was able to get to parity, meaning match the conversion rates that they were seeing with those CSR call center reps. And we got to parity within 2 weeks. And we're able to achieve the same kind of conversion rates. And now we're seeing very consistently along many different cohorts of leads, 10 to 20% increase in transfer rates and conversion rates, which is just unbelievable because of the cost arbitrage that you get. And so it's been very exciting to see that evolve. And we've got a bunch more use cases that we're going to be going live with here in the next month or so.
It is really mind-boggling just how fast the technology is advancing. And for regular listeners to this podcast, they'll have heard me ask this question before, but with technology helping so much with productivity and freeing up people from mundane or tedious tasks, can you talk about how the relationship between the loan officers and their customers can evolve, and how you feel like your technology helps that specifically?
Absolutely. So first of all, we believe in the power of human connection. We believe deeply in how valuable it is for a loan officer, a professional, to be able to give high quality advice to a consumer in the moment that it really matters, right? They're at that moment of decision. And we think we can amplify their ability to do that most of the time versus all of the other things that they're doing that are maybe not, they don't get fulfillment from. And it also isn't necessarily the highest and best use of their time. So if I think about the ability to have a human-like assistant that can be engaging and touching base with customers on my behalf at various times and touch points that are, say 6, 12, 18 months out from a closing, having a virtual assistant that sounds very human-like, very professional, calling on your behalf saying, hey, Robbie just wanted to check in, make sure everything's going okay. Anything changing in your world where you might need to tap into some equity or anything like that, that's just a touch point, right? And well, you say, well, maybe the loan officer should be doing that. Well, we've been training loan officers to do that since the beginning of mortgage. And if you talk to the vast majority of top producers, you're talking less than 5% of the people will actually consistently touch base and call past customers. Yet the retention of past customers is probably the most profound piece of the business that can impact your growth and profitability, right? I always say there's a reason that Rocket is worth $30 billion and most of the other lenders are worth maybe what's on their balance sheet. And the reason is 80+% retention rates compounding year after year after year. If you think about that math, it's incredibly powerful. And you say, well, why is that? Well, the reason, they've had massive sheer horsepower of human beings that they can deploy with a very regimented sales and marketing process and cadence that is executed, right? So for the average lender, they're not going to be able to invest $100 or $200 million in a call center and armies of people. And you can get that with voice AI now. You effectively can get that same kind of firepower in a piece of technology.
Let's talk about where the rubber actually meets the proverbial road here. How do we get this technology to actually translate into more loan volume and production?
Sure. There's a multitude of ways. Some of the ways we're focused on right now that we are seeing do exactly that. Okay, I'll carve it into a couple of buckets here. So first of all, there's a whole bucket and cohort of opportunities and leads that simply have a long tail, meaning their conversion maybe happens over 6 to 12 months. And a huge percentage of those just fall in the trash can, right? They don't get followed up on. And we've proved this out by taking some of our customers have many thousands of opportunities to where somebody applied for an app or they applied or they were an inbound lead and they didn't go anywhere. So we've been able to take what are called aged leads or aged opportunities, load those into the voice AI agent, and it will programmatically and automatically go in and touch all of those opportunities and surface, call it 2, 3, 5% of those turn into a deal. So that was volume that would have just absolutely never happened, right? So that's one area. The other area that we're highly focused on, Robbie, is if we think about these micro refinance opportunities, rates drop 20, 30, 40 basis points, maybe more, hopefully at some point. How much of the database can you go back and help that you've done deals for in the last 2 to 3 years, right? And if you talk to an executive at a large retail lender or large lender, and you say, well, if we see a 75 basis point drop or 50 basis point drop in rate, are your sales and marketing engines calibrated to a point where you're going to maximize that opportunity? And the answer is typically absolutely not. And there's really a lot of anxiety around that. And so what you get with a voice AI solution is infinite scalability. So if you have one of those micro opportunities, you can call 1,000, 10,000, 100,000 people simultaneously and systematically and harvest as many of those as possible. And then you can set up the technology to live transfer to a retail loan officer, live transfer to an inside sales type of loan officer. And so if you think about the average organization and how many deals they miss when those rates are dropping, because there are countless organizations, some of the big call centers that are out there that are going after your customers with a lot of armed with a lot of data and a lot of horsepower, right? So that's another area. Those are just two distinctive areas that we're setting up today that we believe convert. The other thing that I would tell you we've had a lot of success with is the buying cycle on the purchase side for a lot of first-time home buyers and other types of home buyers, quite frankly, is much, much longer than it ever used to be, right? So if you think about some cases, 9 to 12-month sales cycles, well, loan officers, they're very driven salespeople, and in some case, as a former salesperson myself, we get distracted by what's in front of us that day or that week. And it just naturally, that business falls through the cracks. So one of my favorite questions to say to anybody on the production side of mortgage is, if you look at your business over the last 12 months, what do you think, how much do you think fell through the cracks? And the answer is always something like maybe 25, 30% opportunities that they just didn't get to. And so voice AI can help fill in that crack in a very meaningful way. And when you look at kind of those use cases and how they compound, it adds up to more homeowners, more home buyers that you can help.
There's been such a proliferation of AI companies or companies touting certain abilities. Where are the opportunities still out there as companies move forward? What's the biggest risk they need to consider during their evaluation?
So as a lender, I would tell you there's certainly equal parts risk and equal parts opportunity. Okay, I'll speak first on the risk side of things. And by the way, just to full disclaimer, I believe most of the risk, as long as you can control it and you manage it and you put guardrails around it, you control the blast radius, the risks in many cases are very manageable and worth taking because the opportunity is so massive. But the risks we see are partnering with, there's all kinds of vendors every day people have coming at them. AI first companies, there's literally hundreds of them a month that are getting spun up, and lending is an area where they're like, oh my gosh, this is really an opportunity here. Well, the problem is there's huge funding, what I consider a funding bubble. You're seeing companies getting funded, AI companies getting funded at maybe 100 times or more revenue. And so the expectation in a lot of the venture community and the funding community is that there's going to be a large cohort of these AI native companies that their entire business is built on a tool. Okay, so call it maybe just a voice AI tool or something like that. And if they don't hit these ridiculous growth milestones, they're not going to be able to get the next round of funding. So as a lender, I feel your risk is in selecting the partners. You're going to build some things internally depending on your size and scale, but most of the time it's going to be an and, right? It's not going to be a buy or partner, buy or build. It's going to be an and. You're going to build some things and you're going to find partners to augment other use cases for AI. So I think really selecting organizations that are going to be around no matter what, as a company that has technology that's been in the market for 10 years, we pride ourselves on being a very stable organization, very well-funded organization, that we don't just do AI. AI is a massive priority across our business, but ultimately we have a very solid, substantial customer base that allows us to invest in that. And so we're going to be here for the long term. So that's kind of one area. The other area is really understanding your data as a company, how your data is flowing to the different models that are out there. There are all kinds of places that the way they build value in their solutions is to send your data to places that maybe you don't want it to go, right? And so I think most lenders would not want their customer records being sent to OpenAI or something like that, right? That would not be a good idea. So there's risks there, if that answers your question. And then on the opportunity side, if you look across the front office or the front customer facing areas, so if you think about the customer journey from lead to customer for life, there are many, many use cases where AI can make things more productive, from content production to building journeys to campaigns to actually the physical outreach to the customer. Those are areas. And then the back office, the loan manufacturing part, there's equally as many opportunities there. I would say arguably some of those use cases are more difficult and complex because of you're dealing with loan origination systems, you're dealing with the agencies, you're dealing with very sensitive documents that you are going to be translating into and using AI to do that. So, but there's massive opportunities to really make your great people, your high-performing people infinitely more productive. And quite frankly, I think there's organizations that are understanding that the age of kind of low performers and mediocre performers is going to come to an end because you can just give so much firepower to your people that actually are, really great at what they do.
Where's a good place for people to start? Maybe you can refer them to Total Expert's website, but answer however you like.
So I think it's ultimately we would, of course, love. I've been immersed in everything AI for the last couple of years. I've been very fortunate to have a board and investors that are very, very close to organizations like OpenAI, which has given me a front row seat to a lot of the things that are happening. I'm always willing to have executive level conversations on just what I'm seeing, compare notes. I think a really important component of what's happening here is as an industry, we collaborate and all ships rise, right? Everybody can elevate. So I think that's important. Just have good conversations with people and what their experience is. What are you learning? What are you seeing working? Because it is highly iterative. For Total Expert specifically and the capabilities that we both have today and are releasing in the coming months, we would of course love to have a conversation with anyone that's interested in exploring what those capabilities look like. Can reach out to us via our website. My email, joe@totalexpert.com. It's an executive level conversation. Love to have a chat with any of you. If anybody else wants to have a chat, certainly open to that as well. And then I can connect people with the right folks on our team. But totalexpert.com is always a great place to start.
Joe, I really enjoyed this, and I appreciate you making the time for me. Hopefully we'll have you back on soon. I'm a little ashamed I hadn't had you on until this point, but it was a great interview.
Robbie, thank you so much, buddy. Really appreciate it.
Today's economic calendar kicked off with first-tier data in the form of retail sales for July, which were up 0.5%, a tad lower than expectations. Excluding auto, they were up 0.3% as expected. We've also received Empire Manufacturing for August and July import and export prices, which import prices were up 0.4%, which is much stronger than expected. Later today brings industrial production and capacity utilization for July, business inventories for June, and preliminary August Michigan sentiment. We began the day with agency MBS prices unchanged from Thursday's close, the 2-year yielding 3.73, and the 10-year yielding 4.29 after closing yesterday at 4.29%. Let's wrap up with a joke and some housekeeping. Actually, the biggest joke, and it's against mankind, is that computers have begun asking humans to prove they aren't a robot. But thanks again to ICE for sponsoring today's podcast. By seamlessly integrating best-in-class solutions, ICE optimizes every stage of the loan life cycle. setting the standard for innovation, artificial intelligence, efficiency, and scalability, and defining the future of homeownership.